Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
Well, safe to say this week is one for the history books. We'll get to Wall Street in a second, but the Korean markets had to stop trading this morning when the KOSPI was down 8%, the KOSDAQ down about 12%, but we didn't close as low as that.
Sure. As you said, it is as bad as or even worse than the 2008 financial crisis. And the level of the valuation that you are seeing for the KOSPI, it's almost like the IMF crisis period of 1998. If you look at the Korean market, it actually crashed down to below 1,700. We actually saw 1,680 index. And for the KOSDAQ, it was even worse. That we actually saw two-digit decline for some period, and actually ended about 7% down today. Circuit breaker, sidecar all occurred. We haven't really seen that since 2008 financial crisis. Clearly, this is because we had seen U.S. market actually falling. The Dow was down by 10% last night. So overall, people are just basically panicking. But it didn't close at the lows. It did recover quite nicely in the afternoon because of the news that the national pensions are buying, bargain hunting, and they actually bought more than 300 billion won worth of Korean equities, obviously putting some relief, and also banning the short selling that has helped the market.
Yeah, the 10% you mentioned on Wall Street, that was the biggest percentage drop, as everyone's saying, since the famous Black Monday of 1987. It was even worse in Europe, looks like. What's the story globally?
Right. As you said, the Wall Street basically plummeted for the second straight day, despite the pairing some losses during the earlier trading period, as the Federal Reserve announced the extraordinary funding actions to basically, it's like a QE, but it really did not ease the coronavirus concern. Obviously, the banning the travel to Europe has affected negatively, and European market actually fell more than 12% in some cases. Overall, it was down two-digit decline just yesterday, and that's probably had a bigger impact on U.S. market as well. The purchase of the new assets, is expected to start on Thursday, and it should continue till the April 13th. Basically, this is a very positive news because the government is actually using all things possible, including the rate cuts as well as the QEs. Pretty much, we will have ample liquidity to stabilize the system, but currently everybody just basically panicking, just going after cash. They're selling almost everything, including gold and any safety asset even. We actually saw bond rate going up, so they were selling bonds as well. So all in all, people are just basically applying a panic scenario, and that they're assuming this financial crisis can actually occur because of the pandemic risk.
Right. Well, it has been over 10 years now since the global financial crisis, and the U.S. market, of course, had been really hot recently. Can we go back to that, or is it just going to be this way for a while?
Well, I mean, we think that all depends on how long does this coronavirus issue last. If you think that this continues to last for the whole year, then that will be quite troublesome. And then if we don't get any cures or any type of relief in regards to this is a concern. However, though, we are seeing a very aggressive measures on both sides of fiscal and monetary policies from the various countries, and we think that these level of the support is actually even bigger than the financial crisis period of 2008. If you look at just China, they have decided to use 34 billion yuan, 34 trillion yuan, which is actually much bigger, 8 times bigger than the 2008 number of 4 trillion yuan. So clearly we can see how big these boosting measures that are coming from the various countries. So we think that the overall market should be able to stabilize once we get some idea how long this coronavirus pandemic issue can last in the future.
All right, Mr. Yu, we'll have to leave it there for this week, see if things change at all next week. So thanks so much for sharing your insights.
Thank you very much.